Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is Friday, January 27th, 2017. Hope everybody had a profitable week, a good week if you were not in the markets or away from the markets, wherever you were at. I hope you guys had a great week. It was a good week for us. A lot of changes happening this week in and around the United States and actually around the world. We have obviously a new president. We've talked about this ad nauseum now for the last few months. And here we are. He's got his first full week in office, and he's making lots of changes around here. And because of that, that's making some of these markets really volatile. Now, not so much in the way that we're seeing it in the indices. We've been seeing still a nice solid float up in the indices, but some of these markets, especially on the currency side of things, have been quite volatile. And I guess if you're a Mexican peso trader, you know what we're talking about with some comments that were made about Mexico this week. So regardless of what that is, we have to look into next week and see what's ahead, see if we can identify some areas where our risk is low and our potential is high. So let's get started there. First things first, we got to take a look at what's up for the news, economic news this week. The United States, we have a lot of it actually. Two major events going on. We have the FOMC meeting begins on Tuesday, the 31st. Not only that, I guess you could say we have three events going on. We have the end of the month. It's hard to believe that we're already through January. Wow. So we have the end of the month, which could be a volatile time. We got to look for markup during this time. Not only that, we have the FOMC meeting that begins. That announcement from this meeting will happen the following day, which is Wednesday, February 1st at 2 p.m. Eastern Standard Time. From that point on, goes straight to the employment situation, which is non-farm payroll, and that is on Friday before the market opens or before the regular trading hours open on Friday, February 3rd. In between there, we have a lot of the regular stuff. I'm interested in the EIA petroleum report. We'll talk about petroleum here in a little bit, and also the Baker Hughes rig count. I think these two this week will maybe give us a direction on oil going forward. So we'll keep an eye on that. Now around the world, there's a few different things going on that you need to be aware of, especially if you're a Forex trader. We do have some red news, starting with the Bank of Japan is doing an interest rate decision on Tuesday, January 1st. That will and could have a impact on the U.S. markets, especially the indices. GDP, which I don't think is going to be too big out of the European Union. Then what we have is, well, we also have, let's see here. Where was it? I'm sorry. Bank of England, we have an interest rate decision there, and I believe that's it. So we have a lot of interest rate decisions coming out this week. They're important. We have to keep an eye on those. So always know what news events could be happening and before you execute anything. All right, let's get over to the charts. NASDAQ was an interesting week. We just kept floating up every week. We had a nice balanced week last week, and we suspected it could break out of this. At first we thought this thing may start to roll over a little bit. We had a couple poke trades in here and we got a short, and then we covered them as this thing started to float back up. Broke out of the highs at 50.84 and kept on going. Now we have this nice P shape here with a big gap in here. I suspect they may try to fill this gap a little bit, and we like this zone. We have a zone here in the NASDAQ from 50.96 down to 50.74. If we can get involved in that, we get a roll to the upside, we could take out those highs, and maybe if we're lucky, we can get some help from either FOMC or maybe non-farm payroll number as well. So keep an eye out for that. On the ES, we had a tremendous trade this week. It was an awesome trade. It was, and let's talk about this real quick. We didn't have zones on the ES last week. What we were coming into this last week, what we had is one of my favorites. Is we had an inside week. We have what we call two inside weeks, which is pretty remarkable. We had one inside week back here, and it broke down, quickly recovered, of course. But then we went 2 weeks sideways, inside, and of course they tested down below. And this is you guys got to understand something. This is how the auction process works. Process is just that. It's an auction. It's going to auction down. It's going to auction up. It's going to explore price a little bit. It's going to find out where buyers are stepping in and sellers are stepping in, and where price can go to, and find acceptance. Okay, so it went down and it broke out of the previous week's lows, and it got rejected right away. It was met with sellers, or excuse me, it met with buyers, and they rolled it up, and then they auctioned it back up to the upper level. And of course, there was enough energy in that to break that through and to continue up. We even got a gap up on that. So now earnings probably helped a little bit in here. It is earnings season right now, and we have to remember that. And I would always encourage you, if there's big news announcements coming out like earnings, just be aware of it. Make sure that your stops are in, or you have a hedge in, or however you manage your trade on that. So now we have this wonderful P shape, just like we have on the NASDAQ. I love this zone down here. This is my favorite zone. This one runs from 2276 down into 2267 area, and this actually is setting up much better than the NASDAQ right now. Just like the NASDAQ, this has got some work up here above 2296. The path of least resistance is still to the upside. It's actually going to be still to the upside until it breaks down, down below the 2240 area, and then get some legs to the downside. But for right now, we're going to look for the upside. We like that zone. Keep an eye on it. I can type correctly tonight. All right, the Russell. Now, the Russell was the only thing that didn't make new highs this week. You can see the high was made, looks like about 4 weeks ago, or excuse me, 8 weeks ago at 1392. And just as a quick note, for those of you who are new, are just watching Profiling to Profit. It's been a long week. These smaller profiles are 1 week profiles. The candles are 2 week candles. This composite over here goes back many months. So we had high on the Russell at 1392. What's interesting is the Russell did rally this week, but it did sell off as well. It didn't close like the NASDAQ or the Dow or the ES as well. But we think that with the other indices making new highs, that the Russell could catch up here, break out 1392. Don't have really a zone in here. We're going to watch this to see if anything sets up for us. So we'll let you know if anything sets up. But for right now, there's nothing that is showing us that there's an opportunity here with good risk reward. All right, let's move over to crude oil. Crude, a lot of news out. A lot of people are speculating whether we have a bullish situation or a bearish situation. This is why fundamentals to me is not the place to start. The charts, if you have good fundamentals, you'll have good charts. And when you don't have good charts, that's telling you that the fundamentals are probably not in line with one another. Okay, and what I mean by that is that there's a definite direction based on the fundamental or the outlying fundamentals of your product or your stock or option or whatever you're trading on that. Okay, now crude oil, I wouldn't call it more fundamentals as I would more supply demand issues and stuff. Crude is I don't want to say it's a pure supply and demand market, but it runs pretty close to that. And right now it's fairly bullish. We had a nice move off some recent lows, or what you could call this a double bottom. It did poke down, run stops on the deal, and now we've been going sideways for 1, 2, 3, 4, 5, 6, 7 weeks. We had a nice trade in here right off the bat early in January. We caught a nice $2.50 trade in here off a poke move, and now we've been just sort of sliding up sideways. A lot of volume over here on the composite. Now this is suggesting that we do have more upside. When I say suggest, that's exactly what I mean. It is suggesting we do not have a good risk reward area in here. I will just point out that we've had a low, then we've had a higher low and a higher low, higher high, which indicates that we could be starting to move up. With the pattern, it does play out that it would maybe go up and test the 55.17 and maybe auction up above that, see if they're accepted or rejected prices up on that deal. So right now we're standing on the sidelines. I want to see at least another day of trade. I want to see how the opening of the week comes out before we decide we're going to put a zone in here for risk. It's just not very clear to us right now. I mean, obviously the pattern says it suggests up, but for us we need a clear area to be able to place risk in, so we can have a larger trade on it. All right, so let's move over to gold. We'll just pass on crude oil right now. All right, gold. Now this is interesting. Sometimes this happens in trading. We had this nice move down in gold, tremendous move down in gold, and then we bounced up. Gold doesn't always typically just bounce straight up unless it's going to continue on. At first we thought gold would just roll over. We were waiting for a nice zone to happen, but this thing kept bouncing up and up and up. We did finally get a pullback in here. We got, this is a great example of what I would call a poke, or people call this a reversal pattern. There's all kinds of names in here that you can use for this, but price moved up above the previous week's high, ran back down into the previous week's range, and of course went down, tested the previous week's low, and then gapped down below that low. So now we quit. We're not one-time framing anymore, and now we're below here. We do have a zone. We had a zone that was a little closer. Because of the way this thing closed and some of our rules, we decided that, hang on, we got to move this zone down a little bit, because what we don't want to do is to have this thing just run right through us on the deal. Now, of course, we use triggers, and so should you in your trading. But our rule said that if we close close to the zone, then we move the zone down a little bit. We do have a nice area here that we identified on the gold on Goldie from 1173 down to 1159. That's a fairly big zone for us. However, we like this zone. There is some gaps down here that we think that if they do keep coming down here, they will find some buyers down in this area after maybe that gap is filled. And if not, it could come down, just touch it, and then roll back up into here. However, the risk reward is phenomenal in here. We would be looking for a test of the this upper sideways zone, as we call it, up here at 1208, and then of course to take out those highs at 1219. So tremendous risk reward in here. So watch that zone there. That's gold. Let's move on to the euro. Okay, on the euro had a nice balanced week up here. It's been moving very nicely again, going back to the traditional way of looking at whether a market is got some buyers in or sellers. Just look at your lows, look at your highs. They continue to move this thing up. The lows get higher every time, every week, and the highs get higher every week. I don't see what I would call a big topping pattern over here, where I think it's going to roll out and take these lows down here at 103. We like this zone. We had it on last week. We think there's a chance it comes back down this week and we get hit, especially with the things coming out of the Eurozone. And then we'd like to get involved, clean up this mess up here. We got a mess up here, and a real thin market that needs to get filled in right here. We think that if price gets back up here, we could go ahead and zip that up pretty quickly, and we like that opportunity. So watch the zone here on the euro. That zone is from 106.27 down into 106.72. Is that right? Hang on a second. 106.27 down to 105.72. I'm sorry, 105.72. That's a 105.72. All right. So watch that zone there. All right, let's move over to the bonds. I'm having troubles typing after this week. Really nothing going on in the bonds. Let's take a look at the structure here. nice, incredible move down the bonds, which we caught some of this, mostly on the notes, of course. But if you caught the bonds, you had this was a phenomenal trade coming into the end of the year. This bounced after a big move like this. The market needs the rest, and it is. And you can see we're starting to build a lot of volume down in here. The bottom down here, 147.12, needs some cleaning up. We know it does. After we had a nice bounce here, you see we had a B shape and then another B shape. That's a bearish pattern right there in the profile. We suspect that this thing could continue down and make new lows at 147.12. We're not interested in getting short in here. This is to the point where we could be searching for a bottom and a move up. We're going to wait until this makes a new low. Then we're going to see if we can't find some risk to the upside. We think the upside has potential. We don't know if it's going to be a big upside yet, but we'll see how it reacts down here at the lows when it comes. We figure it will come. And then I know I'm going to get the question, so I'm going to answer it now. Then if you know it's going to go down to the bottom, why don't you trade it down there? Well, here's why, and I will always say this, and for 14 of my trading years, if I don't have risk defined, and I can identify where my risk is compared to where my reward is, I have no business being in that trade. And that's what it's all about, is understanding where risk is. Where's your risk and you're going to be in a trade? Yeah, I could say it's going to go to here on the notes 22.16, but where do I get involved? Where do I place my stops? Where do I know where I'm wrong, and how much money is there going to be placed on the line when I do that? And if I can't see that, I have no business being in that trade, and neither should you. And it doesn't matter if we know there's a magnet down there sucking that thing down. It happens all the time. But I've seen way too many times. I've experienced it in my trading career that every time you do what you think it's going to do and you jump in because, hey, it's going down there, yeah, that's typically like the dog that chases the cars too many times. That's about the time they do get hurt. And we don't want to do that. Let's find good, solid areas. Listen, there are loads and loads of opportunities throughout the year. Being patient is one of the things that you have to do as a trader to be successful. And you will hear me, and you'll hear all of us say that at the Market Profile Trading Academy. You have to be patient. You have to pick your spots. There's plenty of spots. You will miss some, I promise. We've missed some. We miss them every year, every month. It just happens. You got to get past that. Otherwise, you're going to expend your emotional capital that you don't want to spend, because that's the most precious capital that you have when it comes to trading. So, not the rant, but that's just something I know I'm going to get the question on. It's the same thing with the bonds here. We have 122. Bonds bottom is a little different than the notes bottom is a little different than the bonds, the way they bottom. However, a B pattern, this suggests more downside. If we get below this 123.55, we should come down and at least kiss it to see what's down here. They'll auction this down. And just again, as I said before, recognize what's happening here. They're auctioning this thing back and forth and back and forth. That's why some people can watch it auction up and then get short and come back down. And if that's your style, then that's great. But in here, we're looking for zones to get involved where we can identify the risk, get a trigger in, and see how much upside or downside we can get here. So we'll sit on the sidelines. In here, by the way, we did have a good poke. There was a good poke opportunity right up in here. If you stayed in this trade and got the gap down, congratulations. We did not. We covered too early in here. But anyway, that's that. We're on the sidelines right now. Corn. Corn had a nice break, but we had a nice zone identified, and we posted this in the Slack room. If you have not been in the Slack room to take a look at the charts, we posted this whole scenario here where we had the zone. Price absolutely fell out of bed, just blew through our zone. We didn't get a trigger, and the zone is off. It's invalid. That's the rules, and we write those rules for us so we can make sure we don't do silly things and lose our capital. And somebody's going to say, well, yeah, look here, it could have triggered to the long side. You're right, it could have, but it wouldn't have given us anything, and we would have rolled back over and been stopped out on this thing. And that's not the way we want to trade. So in this case, we popped out 2 weeks ago, corn did out of we again, if you've been watching these videos for any length of time, you know that 345 has been a line in the sand for corn. It finally started trading above that. We identified another level at 360, 350. It popped above that, got rejected again. Here's your auction in process. Boom, got up. Some buyers tried to get in here and get a little frisky. That was met with sellers, and they pushed it back down into I want to call this a zone, but it is a sideways zone if you go back and look at it here for quite some time. Not perfect, but not all zones are perfect like that. So right now we're going to sit and wait and see how things pan out. They could move this back down into all this volume right here. We have a POC at 358. I suspect that we'll come down into here, touch this POC, and just bounce around. We do have a USDA crop report coming out on the 9th, the WASDE report on the 9th. So they could be just sort of going sideways, maybe drift up here until then, but there's just nothing to trade in here that we see for the time frames that we're looking at. All right, let's go look at soybeans real quick. Soybeans are the same thing as corn. Soybeans had this remarkable move, which this was a phenomenal move. This was a B pattern that wasn't a bearish B pattern, okay? And here's why: because it came from a balance area early in the week, and then it broke out and created the B and finished at the highs of the week. So this is a bullish scenario here. It gapped up. Obviously, it's very bullish. It had a very nice balanced week, which suggests more upside, but this is corn and soybeans and wheat, and lots of crazy things can happen with these the grains, so you have to be a little bit more cautious about it. Now they came down, they broke to the downside. Now this could be just a pullback before we see more upside. We're going to have to wait and see, just like we did with corn. I don't see anything that gives us a good opportunity. We have, man, you can see here they tried to break this down even further. 1, 2, 3, 4, 5 times they banged on that door down there at 1044. We'll see how they open up this week and see if they have more downside to clean up this thin market right here. But for now, the grains are just to sit and watch and see what sets up. And if we see some zones in here, then we will definitely post those zones. So other than that, I think that's all we have here with the charts this week. Again, watch your news. This week in the US, we do have a couple of big events. Again, FOMC, I'll remind you, the meeting starts Tuesday, the announcement's on Wednesday, and then on Friday we have non-farm payroll. And guys, we have been having a wonderful year so far at the Market Profile Trading Academy. I know Matt had somebody out this week with him working privately. Josh has been putting all kinds of great stuff out. Need to go over to the website, go to the free resources. That's your first stop when you visit the website. If you do not have the 7 Secrets of Trading Success ebook, get that ebook now. Get that out of the way. Learn that information. Then scroll down to the bottom here. We have loads and loads of, and I'm going to say it many times, free information over here. Tips for newbies, trade management, trade execution, trade psychology, videos. Oh my goodness, we have videos. Matt had a great video, markets breaking out, or are they? Take a look at that. Obviously, we do our profile to profit every week. If you're not a member of the Profiling to Profit, this video will come out at the end of the week after the fact. And then we have webinar recordings in here, all for your education, guys. Now, again, I talked about Profiling to Profit. This is a subscription now with us because we go in depth. We talk about markets and we update these things throughout the week in our Slack room, and it's a whopping $24. I'm here to tell you this January you would have paid for probably 20 years of Profiling to Profit with this January's opportunities there. And then I'm going to say, hey, if you are wanting a little bit more in-depth plan on a daily basis, you need to check out the Trade Plan Plus. This is phenomenal. Josh covers 4 futures markets. Every morning you get a plan, and it is uploaded into the Slack room, and it is one of the most detailed plans I've ever seen, and it is awesome. I read it myself every morning. It is a beautiful plan, and again, the whopping price of $28 for that on a daily basis. You'll get access to the Slack room. You'll get access to all of us to ask questions. We have a great group of people in there right now. We're talking about markets, finding awesome opportunities for you to profit. It's just a good environment there. Don't hesitate to ping those, you know, ping us for one on this if you have questions, and two, just register right here. Again, if you have questions, go to the contact button. You can either call us, we do pick the phone up, or you can just leave your name, number, and everything else in here, and we'll get back with you. Other than that, guys, I just hope you all have a great week trading. Appreciate you all. Appreciate all the feedback that we get from you guys. All we can do is make things better for you, and hopefully we can cut your timing to become proficient in the markets, because I know all three of us, we spend a lot of time spinning our wheels early in our careers. It took us a long time to get a handle on this, and we just hope we can help you too. So anyway, as we look forward to the next week, hope you guys have a great week of trading. Take care. We'll talk to you next time.